Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, and we're at the 5th of September. Oh, my God, I'm going to be cold in 2 months. I just know it. Unbelievable. It's 90-something outside in Chicago without the heat index. And it is September 5th, 2023 at just about 6 p.m. Central Time. All righty. You know, you go away on these holidays, and last week was what I call a lost week of trading for a lot of traders, me included in that. Although I did put out some trades on ETFs over the Friday, and today I was able to do okay with them. I was surprised, to be honest. And I'm going to be covering, by the way, in my ETF tonight, Darden Foods. I think it's important because we want to look at the service sector and see what's going on, because the food industry is looking bad. And I wonder if that's a sign for the futures coming up that the easy money from the service sector, the warm weather, people going on the vacations, when that all ends, what happens? One thing that's happening is your money's going to disappear in gasoline and fuel of all types. Why? The Saudis and the Russians today announced that they are keeping the production cuts in place through December. Now, does this get them closer to the Iranians is the big question, because Iran and Venezuela are able to produce as much as they can under current OPEC rules because of all the U.S. sanctions on them. There will be a point, remember that I said this right here, that these two are going to fight again, a big time, because the Iranians will want to get their influence and go after. They used to produce 4 million barrels a day. They're nowhere near the size of the Saudis, who can go up, 11, 12 million barrels a day. That's not what I'm getting at. What I'm getting at, here we are with the Saudis cutting production and the Russians and these other countries that have an interesting relationship with Saudi Arabia, to say the least, ramping up as fast as they can. They have about 12 to 14 million barrels of oil in the ports of China. People don't realize that. It's not counted official because it got there as the sanctions were being put on. China doesn't pay attention to any of that. I don't know why they just don't take that oil, because they could give a darn what the U.S. tells them or doesn't tell them to do. But you push it a little too far, maybe they're worried, the SWIFT system, other things, I don't need to fight that much. I don't know. But it is not something that I want you to forget about, okay? Because it's going to come home to roost sooner rather than later, after December, so probably next year. Why? Saudis can only cut so much, and if they're giving market share away like that, they'll say enough of the market share. And then if the Iranians don't want to do that, who knows where this ends? They don't have a history of working well together. Then I look at the market, and I have been bearish, as you know, on the futures markets. We talk about it over and over in the notes and the bonds, saying that the futures just look bearish, which means rates going higher. Well, all of a sudden, the traders that were saying, buy these, you got to buy them, now I'm hearing cry, cry, cry. That's the word, as they just keep adding more and more yield to them. How do you get out of the way of corporations and the Treasury? I don't understand it. Everybody's floating money. The Treasury told us they had to do $1 trillion this quarter, right? It wasn't a secret. That's what they had to do. Every day it's 60 billion for this one unit, 100 billion for this. This gets pretty serious. How do you sell that? You sell it by increasing yield. So the dollar has been taking off, and the dollar's almost at 105 at the expense of the euro, which is down to the 107 level. How does the metals hold up against that? Poorly. I mean, given the choice, why are you doing anything? You got a strong dollar, you're going to get 5%, 6% return on your money without taking a gamble. How does the stock market fare against that? And there's your big problem. This is the weak month of the whole year. The weakest month historically is September. Does it have to be? Listen, I don't walk on water. I don't know that it has to do anything, but it traditionally is. And I think it's going to be this way again. I think this market rallied late in August, and it is vulnerable at any point here to sink back down and even test those lows. It will not surprise me at all. So as we take a look at the charts, You're still over the 18-week average of closes, the red line, 44.12. You're sitting here at 45.01. So you're about 90 points away in round figures. The market has come back nicely. If you really take a look at this rally to the break, you made about a 50% retracement and you're suddenly stalling out a little bit. I remember everybody was so bullish just the past week and a half, 2 weeks. We're going for the moon up here. And I know I was here going, I don't think we are. The trend is up. I have zero reason to be short. None. Not with this pattern. Higher lows, higher highs. The market's over the 18-day average of closes. That's bullish. The bias is up. Bias is measured this way. If you're over the 18-day average, you have bullish bias. Under, you have a bearish. Then filter your other indicators using that, and it gives you a game plan. You don't have to do what I recommend, but that's the way that I like to go about it. And here's your Bollinger Band. Now, I want to thank so many of you that took advantage of our Labor Day sale. It was probably the biggest Labor Day sale we ever had. Courses were sold like they were walking out. I mean, it was one after the other. The two big courses that went were the Outside Day course and the Bollinger Bands. Bollinger Bands #1. And you can see up here, it's exactly what I teach. The market's overbought, gets up, challenges a Bollinger Band. I teach. The professional money comes out of the market right at that zone. Why not? What are you gaining? You're only going to stay above or below a Bollinger Band 5% of the time. Why are you playing a game with that, all right? They build Vegas on the guy that keeps the 95%, not the speculator that's looking, this is the time it's going to get over it, it's going to keep running. How many of those plays do you see on that work? Not many, if any, all right? 5% of the time. So you incorporate that. Then I look at where we're at on the NASDAQ. You're overbought. You have to learn with slow stochastics to define, number one, momentum up, momentum down. Momentum overbought, momentum oversold. Embedded, not embedded. When you come out of embedded, do you instantly go bullish or bearish? It's all in the course. Well, you've got an overbought market into resistance, trend up, bias up, but that's the flag. Don't have to play. That doesn't mean it can't go higher. You don't have to play is the key word. You wait for the market to come to you on your terms. When we look at the Dow, you have a lower low, higher high. In retrospect, over the past 2 weeks, I had been saying this is where I thought the pros were going to be what? Covering shorts. You then lost your embedded reading. You went to the 18-day average of closes, and you've stalled out, void of a trend. In the Russell, we have a lower low and a higher high fighting the same way right here. Not much we could do with that. I'll let the market play itself out and we'll just see where it goes. I can't stop that phone. It'll ring about 5 times and it'll end. I should have turned it off. I forgot and I was waiting for a call. And that's the person. I'll call him back. This is big support. The 200-day average, the 100, and the 18. That's all kinds of support right here. Momentum is flat at this point. Not much you can say about it other than a lower low, higher high, void of a trend. Then we get to the bond market, which over the past 3 days has just completely let go to the downside. It got overbought and just fell back on you. It hasn't been doing anything that I can see that makes sense. The trend had been up, and I'll show this to you. See if I can get it. Yeah, there we go. Okay. So here's a market with higher lows, higher highs, but it's overbought as can be. Overbought, oversold is such an important filter in work that I can't stress it enough. You've got to learn how to play with it. And that's just what this market did. It kept you away, and now suddenly it's void of a trend at all. In the 5-year notes, you came up. You had been in an uptrend. You made a run for the upper Bollinger Band. You just missed it by a few ticks. And now the break on Friday was an outside, was that Friday? Yeah, on Friday, an outside day down. Again, that outside day course. What does it mean? It is the end of this move. When you get a market that's been going up in an uptrend, you get an outside day. Until that high is taken out, you assume that you have just gotten a signal. The market needs a pause. It might want to reverse. It can't reverse the trend in one day. Typically, it's not going to happen on the chart. but it can say pause out, money spent on the long side, maybe it's a good time to book it. That's what I teach. In the dollar index, you're over the upper band. You're not embedded. I'll let somebody else want to own it from that point. Nah, not me. And on FXE, I said FXE. You know why? I have clients in the ETFs short the FXE, which is this market, looking for that on the downside if they took those recommendations. Higher high, lower low. First spot to be covering shorts showed up Friday. You hit the Bollinger Band. You're getting follow through. Now it's time to get very cautious about being short much further. But FXE is a little different than the Euro futures. But they remember, one's based on the other. The FXE is based on that. The British pound. All we did is get a bear market rally into that. Now, there's a lot of talk here that maybe the Brits are going to stop raising rates. Maybe the economy can't afford it. Where are they? I don't know. You're oversold. You're void of a trend. You got a higher high, lower low. Haven't been able to close over the 18-day average. This is an ugly chart. You got to wait for it to come to you. Bitcoin. Why do I want to own any of these right now when the dollar's running to the upside, interest rates are running? Obviously, people want it just because it's Bitcoin, but I don't get it. Never did get it. Higher high, lower low, and the market is still waiting, I guess, for the SEC, grayscale, the appeals to end, and where we're at with this. Are the ETFs going to show up? Are we embedding? That's a big question. You can't count both numbers today because we don't know where Wednesday's going to finish up. So we come into the marketplace, and let's see if I can get this to back off at all. It doesn't want to. I'm going to come back one more and see. Sometimes it just doesn't want to do that for me. No, I can see what it's moving. It's moving this. I can't do it. In the Brent versus WTI, all the way from up here, crashed back down, sitting, but now we get into these markets. So as bullish as the news is, look at what I'm saying. I teach you never buy over an upper Bollinger Band. I don't care how high it goes. 5% of the time you stay above it, and I know what you're going to tell me. You have to. You're going to say, Ira, you're so wrong. This is the time it's going to run. And I'm going to go, okay. Let's assume you're right for the one time you'll be right. Congratulations. I still would not tell any of my clients to buy over a Bollinger Band, period. Game over. It can go up another $5. It doesn't matter. I wouldn't buy over a Bollinger Band in telling my clients to do so. Got it? Overbought, over the band, let somebody else own it. Notice gasoline isn't going anywhere. It's going to be time for us to not look at gasoline now, and we got to switch to the heating oil. I said I'd do that. I forgot to do it. And in nat gas, all right. Big problems are still happening in Australia. So we've got a couple of the big plants. They are, from the looks of it, September 7th to the 14th. One of them's going to see some level of workers go off the job. And then we might see a full strike against all the plants that are there, the two that are being struck again. That could happen on the 14th. Already, prices will start moving, not in ours yet. It'll start with the Dutch brand because Europe is much more dependent on getting its gas. And if Asia has to step in and grab some of that European natural gas, prices will move. You get two bidders for it. The good news is Europe has had a season where they've been able to really build supplies, but they don't have enough to get through the winter. They just don't have that type of storage. So what they've got to do is be watching, and you keep your eye on this. Hedging might be an appropriate thing if I were sitting there looking at it. The U.S. is in a different situation. We just have so much natural gas we can export till there's no tomorrow, and we will. Higher high, lower low, no real trend to work with. So, you see me talking all these terms. Do you understand them? You know what I'm talking about? For you, what we've done is put together with our friends from Futures Magazine, Guide to Technical Indicators, volumes 1 and 2. And this is so neat. I look at the new ones. I saw a competitor firm of mine today send out their new one, and I signed up for it. And of course, I got it under a different name, read the whole thing. This is so much better. I can't begin to explain it. It comes to you in a PDF. It's got samples galore inside of it. And it's going to walk you through not only a few of the indicators, but a lot. Bar charts, price charts, candlestick charts, chart patterns, all kinds in there. The trend lines, how do you draw them? What are they? Walking dog, ascending triangles, all these terms. Market sentiment, you don't hear much about that anymore. It was the hottest thing forever, and I told people I thought it was nonsense. For me, it was. Elliott wave principle, options primers, and here's a key to it. Money management. I'm not just talking stops. I'm talking money management. How do you pyramid? How do you add to a position? How do you come out? How do you peel back on positions? What do you do? Where does it come from? If you don't get some of these basics, you're lost. We make it easy. You get all this, it's a PDF, and how do you get it? You go to our website at iraepstein.com under free offers. You'll see Guide to Technical Indicators. Can't make it any easier than that. You can move your cursor, by the way, right up here at any point. You're going to see an icon show up. Give that a click. So here's all the instructions one more time. And in the event you don't get too scared and you can't do either, call my staff. They're there. They'll work with you tomorrow. Don't call them at this hour. I promise you they're not picking up the phone. I'm Ira. You have yourself a great evening. I'll see you all tomorrow.